Okay, quick Tuesday morning radar update. Not done one of these for a while because there's not been that much to really look at. First things first, I'll just go through the current action. The US basically closed the gap yesterday. It closed the gap on the Qs, which was good for the, nice to see the Qs close the gap first. But one market does not make a trend, as we always say. The Dow as good as closed that gap on yesterday. Well, it did close the gap in the afternoon, didn't it? The Qs fully closed gap. The Russell closed the gap as well, and the S&P, I'm pretty sure it closed it in the after session anyway, but as good as closed the gap. So, now those gaps are closed, everyone's been caught offside being uber bearish on the gap down. The market can go about its business and decide where it's going next again. So, is it going down again? Who knows? I know there's a lot of people will be throwing out like abandoned baby, the shooting stars, and all these different, candlestick patterns. The psychology of it is, the market gaps down. You don't sell in the hole. You should be sort of probably taking profit into that action if you're a short-term trader. But once the gap has filled and everyone's caught offside, then the market, the bears can step in again, or the bulls can take it from there. No prediction needed. I will just go to the main markets. We'll just go and look at the Russell because I think I marked that zone alarm. So we had a zone alarm. I did post it on Twitter. If I post my my private sort of screening methods and stuff like that, I post it in my Twitter community. So just follow the link to the community. It just stops the crazy people who have no interest in my work, but basically have an interest in trolling me. It just stops those commenting. So if you want somewhere where you can just look at my stuff when I do share it, just go in there. I don't send anyone any messages. I don't, push anything. I just share my work. So zone alarm on the exact high day, and down we came. What's a zone alarm? Well, it's just, when the market's clearly bearish, we're trending down on multiple markets now, and it's just that pullback into where where it just got, I won't say stretched, but what I call sort of mean trend areas, and in a downtrend. And if we go through all the markets, they all, we got 50% pullbacks on some of these markets. I think the Dow went a little bit higher. The Dow's got those kind of safety stocks in it again, like the FTSE 100. The reason the FTSE 100 is kind of holding its range. Now, the best thing for the markets and the instant hit to ease the pain is probably going to be oil prices coming into it's instant relief for everyone when the oil prices come down, apart from people who are long oil. But DAX, bit of a ledge on the DAX there. DAX is a horrible index as well, like the FTSE 100 is. It's horrible action. But 250 small caps. And some people look at the AIM market, but the AIM market's terrible. It's absolutely terrible market to look at. The small caps is a little bit better for us who like to trade these trends in these small cap stocks. So we've got some interesting levels. I posted it on ShareScope, so try and follow the links to ShareScope to have a real in-depth look at the way I look at levels. Where do we go from here? Well, if the markets are going to hold these levels, and let's not get bent up on these things. These levels are not that important. Everyone says if it goes below there, that's it. It's going to be absolute bloodbath. just being 100% long from there to there is a bloodbath, and this is just, it is what it is. It's the thing I always say is, and I repeat the one after the pandemic, and I repeat it constantly in the pandemic. Basically, if I had to commit to making a call, which I don't, I'm no trigger, no trade. If I had to commit to making a call in the pandemic lows, my view was, I thought the lows were in, but wide and loose would be the call that I would make. And what happened? The market melted up, and then all the stocks, the market was near new highs when the stocks started to break out. The new leaders of, the small cap leaders, they were a bit after the sort of large caps in the US, but they went on a huge run, and that was it. There was nothing in that big run we rode what was about picking bottoms, picking the bottom in the market. It was just about, my job is, stock has to break out if it's going higher. There is no way it can go higher without breaking out. And the money is not made playing ping pong in a range. The money is made by getting invested, and you're going to be fully invested when the market tops if you do everything right. That is the reality. You're going to be heaviest. You're going to have the most profit on the table, and that's where you want to be. And I'd rather have the best problem in the world is to be a heavy volatile profit, rather than the worst problem in the world is when you buy more of stuff what's going down and you have a heavy, a volatile loss. It's the exact opposite. Being diversified, the way it works is, especially my preach is, I'm going to nibble at things what are breaking out, and I'm only going to get to add to the ones what continue. And what that does, it concentrates me in what's working, and all my losers are just going to be the same. They're going to be percent doesn't come into it with position size. They're going to be a percent of account, not 20% here, 30% there. That doesn't matter. It's actually, one of the least important things about investing, and as with win rate as well. It's how much you win when you win, how right you are, and feeding the winners. You're going to be heaviest in your best ideas, and cutting the losers, moving on to the next potential winner. You're going to be rotating maybe 2/3 of your portfolio, what's trying or stopping you out, and the things what are working, I'm going to be leaving them alone to work. And that is how you make huge gains. Warren Buffett didn't make huge gains by being diversified. He was concentrated. If you've got one great idea, I get trolled on Twitter every time I talk about this stuff. I've got one person who keeps coming back trolling me, and that person is averaging down, and doing exactly what's going to cost the most money. And I'm doing the exact opposite of that. It's a math thing. Go and work it out. Go and back test it. So, no need to predict. The bears, we've been waiting on this little market sort of this pullback here to see what the bears have got. If they take it through the lows, it's no big deal. The trend model is 80% bearish, 20% bullish. Been extremely low heat and very low invested for a long time now in any kind of longer term holds. But that's where we are. But we turn up every day, and we do the work, and we see what's trying to move, and see what's when the stocks are ready, we will see them start to break out. And there's going to be whipsaws. You're going to dangle toes. You're going to get the occasional toe bitten off. But at some point, the market will the stocks will start to move again. No prediction needed. Moving on, we'll just quickly jump into the UK small caps, UK large caps. It's not even Wednesday, and I've just done the soapbox Wednesday. We'll just have a quick look what's in here, and I don't expect to see much, but 10.43. We should have traded. Say 31% maybe. Oh, that's wrong. Hang on a minute. There's a few in here. Let's just have a buzz through and see what's in here. Iafina, I think someone mentioned it had been tipped. I know some at my side have been riding this for a long time. Not me, but I can grind my teeth over that. Bid stacks. First time we've seen it a couple of times. Just remember how these things play out with the pumpers, you know. I know fair few at my side rode this leg and just totally traded it correctly. TGA continues. Shoe zone, yeah, it's not my favourite, is it? I'm not into stuff like that, but it is going up, which is quite amazing. It's to see retail in there for once in the trending screens. And I'll just go into the large caps. I'll put 30% in again. I'm giving them a bit of leeway today, and there's not much in there. A few investment trusts. We know the story in investment trusts, which are moving. Some nice trends. I posted the investment trust months ago, so go and have a look at the GTRS screen grab I posted. So that's what's in the markets today. So, you know, not much to see. We're through the lows on our markets, and we'll see how the US opens. A little bit of a rip into the close, wasn't there, yesterday? So looks like they're mid-range at the moment. So we will see how the US opens, and we'll come at the screens again tonight. Okay.